Hello, this is Dave, and welcome to Equity Story. I am with Mr. Wolf and General Share Advice and Not Personal. And Wolf, let's dive straight in as fast as we can because there's a lot to talk about today.
Yes.
Can we have a little chat about AGY? It's an up-and-coming lithium producer, not too far away. The chart is looking reasonably happy, Wolf. It's around a 530 million market cap. What's your take on today's announcement?
Well, just a nice another progress report saying that I think 95% of total work's completed. So yeah, I'd say by the end of the year they'll probably be producing. You know, when they're going to cross that commercialization path, probably within the next 6 months. But at least, you know, you've got another lithium producer where you can get excited as a shareholder. There's going to be some cash flows coming through. So well done to AGY. You know, is it my favorite? Probably not. You know, Argentina, prefer their stuff in Australia, or maybe, you know, US, maybe. So we'll see how it goes. Anyway, it's one to probably trade at this stage overall. So I'll leave it to you.
All right. Well, I think we wait to the end of the week, Wolf, and see if it's on Einstein's.
Okay.
TOE, Toro Energy. Now this, in the old days, uranium play. Is it still a uranium play?
Yes.
Right. And talk us about this one.
Well, I want you to bring up, because this is more education for everyone out there, is why it's important when I come up with scoping studies, feasibility studies, to have a look at the fine prints. And the fine print to me is the assumptions that they use, right? Because it all looks good and well when they just give you those flash numbers, the headlines type stuff, right? Lake Maitland uranium project scoping study. But when you look at the actual assumptions, you just puts you off completely, right? So just go down slightly when we get to the numbers. All right, so they're talking about all the positive stuff, as a company should do first off, right? So key improvements, yeah, all good and well. Fantastic. So it seems, right here, let's just stop a little bit, up, go up a little bit. Yeah, just here, right? Keep going up a little bit so we can see what the significant stuff is here. So lowering of the average grade to 370, it's not ideal for me, even, you know, from 631 to 370 ppms. I mean, that's low grade. Anyway, it means that they've got more ore to process, means possibly more production and so on. So that's the reason that they probably have had a look at and trying to get a lower grade tonnage through for a better looking project, maybe, right? So all those things you got, you know, life months of 17.6, potential production, all this sort of stuff. You're looking, you know, you're thinking, wow, that looks decent. Let's go to the most important bit, Dave, and that is the assumptions that they use. So just go to the next page right there. What price do they use? Optimization results are based on the following material assumptions. Price of uranium, Dave, 70 per pound. Now, what's the price currently? I think it's 50.
Yeah, and 50 is like a high price for it over the last.
Yeah, well, exactly. 50 is actually historically quite high. So as you can see, just on that, you think to yourself, there's got to be some change, complete change in uranium production, pricing, and everything else. A complete shift, right, from that song. But you don't. I can't see it. That's the thing. So I don't know why they're using 70. I suppose, I mean, they're probably using it to make the project look good, but way too bullish. This is going to be struggle street, I'd say.
So really, they should be using 35 or 40, really.
Well, Dave, they can't, because it's probably going to be
yeah. Then they've. But you know what I mean.
I know what you mean. And even if they use maybe spot price is not quite reflective of the underlying market to market. So in other words, a customer to a supplier, right? What the long-term contracts might be. Maybe they are a little bit higher. Maybe they are at $50 to $60, but 70, that's really pushing that envelope, I reckon.
But you see, Wolf, this is what's wrong. These sort of numbers should be set by the ASX. That it doesn't lead mums and dads astray. They They
That's
should
a
be.
very, very, very interesting point you make, Dave. Look, can something like that be done? I don't know, but there should be standardization, right? Let's look at, for example, gold price right now, and let's look at, they should do 3 case scenarios. For each project, they should do 3 case scenarios. One at a low price,
Yeah,
one
or
at a high price, and one at spot,
yeah.
right? So everyone can have a look what the difference between, a bullish case, a bearish case, and a normalized case is.
That's exactly how it should be done. So, all right, I'll get on the phone today and sort it out.
Yeah, but I think that's going to start. You can see what's going on today.
Yeah, it's down. And SDV, Wolfie.
Mhm.
I know you've liked this story. It's had a right little fall. What did you make of today's announcement?
Look, I think the falls can be put to 2 things: loss of CEO, loss-making still, right? Obviously, the market does not like loss-making companies because you have to keep going to the market, the well of the shareholder to keep you going. But you know what? I think it's been way overdone. You got the revenues up 55.6. That's 30% up on FY21, and a pretty looks like okay outlook in FY23. I don't know whether they're going to become cash flow positive in FY23, but you've got they're talking about positive momentum going into next year. It seems decent, and back at 20 cents was just way overdone. Now at 30 something cents, is there value in this? I'd say so, but you probably, this is another one of those high risk trading stories that needs probably now time to settle down.
Right. It wasn't this wasn't the one that had some also interesting software which BHP were looking at, is it? No, that's
well, it wasn't the software, David. This was actually where selling the chemical technology to BHP. Yes.
Yeah, and that was something you're excited about. Has that?
Yeah, because it could have been huge, right?
But
absolutely. I think that they're still working on that. We just haven't heard anything.
Right. So it's still a possibility. That's what you're
Oh,
saying.
look, I think they're doing the right things. They're treating water, and they're trying to make things more efficient, less costly for companies out there. That to me is doing a good deed. I like companies that do a good deed.
Okay. SNL. A very good announcement, Wolf. You're very happy with this.
Dave, I'm actually, how can I say it? It's one of those under the radar, very lightly traded, but probably one of the most underrated great stories on ASX over the last 5 years. I want you to bring up, right? It's let me see, 26th of the 29th of August annual accounts, please.
Yeah, that's what I had.
Announcement.
Yeah.
Bring it up, and we're going to go down to there's a couple of really interesting charts. So they had a pretty good result, right? They came out on 2 days ago or 3 days ago. So that was pretty good. Everything was good. They said that the growth is slowing, right? But the way, DGL said they were slowing, but DGL got hammered by 40% already. That's another story. These guys are slowing too. But look at the difference, right? And look at what they've been doing for the last 12 years. So you just go down. There's a couple of slides on there that they show. You can see why this story makes me go, wow, there we go. Let's just leave it on there, right? So you've got a total revenue of 198. So over the last 5 years, it's been growing its revenues quite nicely. It's probably even accelerating, right? You've got those
really impressive in a very difficult time, right?
Exactly. So earnings before interest and tax, that's also been growing quite nicely, right? So keep going down to the next load of slides, because that's the real key for me. Net profit after income tax, growing for the last 5 years, possibly 6 years now. Return on average total equity, 37%, right? Go down to the dividends, that's growing, right? And earnings per share, that's growing. That's 5 years worth of data in a very difficult, you've got pandemic, the lows, the highs. It's almost one of those unbelievable businesses that are just flying under the radar. You think, I want to own this, right? Very, very impressive. And I think, trading at 21 times, I just had a look at the numbers. For its resilience, for its great management, for its, what a great looking chart. I think 21 times is well worth paying.
Okay, so for you, you're very happy to have this as a long-term buy, correct?
Yeah, it is. But the only thing is, like I said, it's
Oh,
so illiquid that you probably have to, don't go too hard on it, because if you would need to get out quickly, it's just in case something happens, you'll be stuck with it.
Well, yeah, I mean, it hardly trades $5 a day. I mean, it's really difficult.
Exactly.
Okay, now
in a way that's good, and in a way that's bad.
Yeah, well, it can be good because it can actually hold the share price up. You can see here, it has its advantages, especially if the stock is loved by a few fund managers as well, Wolf.
Yeah.
All right, next cab off the rank, MEK.
Yes.
So we're doing well really on this one, Wolf. And again, the market, I thought those drill results that came out today were excellent. The market hasn't really embraced it like it did before. Obviously, before they're a little bit stronger, but very good results, Wolf.
Dave, you've three things you look for, right? You look for how deep it is, and it's pretty shallow, 52 44 meters, right? That's pretty shallow when you look at it. The width, 24 meters, 36. That for gold is pretty good. And the grades, right? I know the grades previously, I think maybe has completely FOMO'd everyone into believing this is going to be like a 20 grams per ton type mine. No. I think the 4.7, 3.6, 3 grams, that's good enough for me, to be honest. If they can come up anywhere close to 2 overall as St. Anne's as a mine, that would be going quite well. That would be very good, Dave. So for me, I think the results are good. The results, look, you said excellent. I'm probably going to say very good to excellent.
And there's more to come. That's the important thing.
Yeah, exactly. I mean, okay, just go back to the bottom, right? So let's go to the right of the bottom, because they give you the whole spiel of what's going to happen in the next 2 or 3 months. So just keep going down a little bit further. You can see they're going to be drilling lots, right? But keep going down. There is there we go, right there. And it says forthcoming announcements. Now, if you're holding Mika, you've got September essays from the remaining 14,000 drilling of high-grade earths at Circle Valley. So this is rare earths. Then you've got gold essays from the shallow drilling at St. Anne's and Murchison Gold Project. That's for next 3 months. We've got the pre-feasibility study at Murchison Gold Project in September. This could be big, right? So September is going to be pretty huge on results-wise, and possibly very important risk events like the feasibility study. Then you've got November annual AGM. They might say something quite interesting in there. And it will keep going. Look, all the way to December, and you've got initial mineral resources at St. Anne's, Dave. So look, I'm probably going to be holding this for the next 3 months till the end of December and see where we're at.
Well played, Wolf. Give it a real good go.
Yep. Things happening, so why not?
Excellent. Now, okay, Wolf. We had a number of companies that put out announcements last month, and you've given 10 that really did impress you, and you thought, interest you.
You normally give me a drum roll and stuff, or they just like, well, you're going to give me 10 stocks.
Well, I'll give you a drum roll, whatever. Okay. All right. Now let's go through these, and let's start. Let's start. And just tell us your criteria and why you like these stories. And
I just need to set it up. So there's 3 things, really important things I'm looking for. Good results, strong outlook over 2023, and profitable. They've got to be profitable, because we know we are trying to cater to the market that we're in right now, and profitability is just utmost importance. And the time span we're looking for here, right, is 12 months. Now, some of them are expensive, some of them are cheap, but they are very good stories. So maybe some of them are not buyers right now, but if there's what you're saying is correct, Dave, we're going down, they could present yourself some opportunities to buy some of these stories nice and at a nice price. Some of them maybe are already a buy right now, but let's go through them. Let's see what they are. Top 10.
So the first one is Matter Group.
Yep.
Go on.
One of your hot stocks. I mean, they reported very, very well. They come up still with a pretty strong outlook. Not too expensive, Dave. I think this is very well led and one of my favorites, really. So yeah, I'm liking this. This is the way to probably run a business, not too much acquisitions, organic growth, playing it very, very well at the moment. So Mad, let's hope it keeps going.
The next one, we've got PWH Power Holdings. Wolf, it's had a bit of a run, but again, give us your spill on this one, why you like this one so much.
Oh, look, I think it's a fantastic result. First of all, probably surprised on the upside. That's the first thing. So again, kudos to the management. What a probably strong outlook they've got. We know with the EV space heating up, their new division, right, is actually going incredibly well, almost doubling, tripling in a short space of time. And that's going to probably start now making the bulk of the actual revenue. So I'm really excited for the future for PWH. The only thing, of course, getting us at the moment is the strong bounce now makes it expensive again. So you just got to be patient with this, but fantastically led.
JLG, a long time favorite, Wolf. And yeah, obviously technically not looking too good at the moment, but just expensive, but very strong announcement.
Yeah, it was a strong announcement. More growth to come, of course. Again, I think they're going to have one of those multi-year, decade even of positive conditions for them to make lots of money. They are playing the game beautifully at the moment, so they're making the right acquisitions. They just moved into the US, remember, which is of course a big risk, but it could be pay off in a big way because globally, it's not just Australia that's being affected by climate and the restoration work and catastrophe work. It's actually global, not just Australia. So I think probably astute. Let's hope the measurement what they're doing, but I'm liking what I'm seeing. So again, if it comes back to that $6, maybe that's the time to have another nibble.
ALU, Wolfie, superb announcement, and they're holding up quite nicely at the moment.
Yeah, it was in your face announcement, wasn't it? It was one of those markets expecting average to poorish results, and they've come up with excellent results. Really caught the market by surprise, and a good outlook to boot. So for me, are we back to that bullish outlook again, bullish story, Altium as a market darling? And I think maybe we are, Dave. I think this is probably one of the better now tech stocks, right? If you're looking to buy something.
Well, for PPE, again, I think we got this on as a trend at the moment. You're very, very impressed with this performance.
Yeah, look, this is something we have never looked before, right? So there are probably going to be about 3 of those that we haven't really touched on, maybe 4. This is the first one, PPE. So this is employment services. I looked at a number of stories in this space. I just wanted to see. So I did this week and last week I did some research on some of these stories to see what's cooking, what's not cooking, what are the great stories in this space. And I narrowed down to maybe 2, APM and PPE. I chose PPE for probably 2 reasons. One, it's cheaper than APM and it's got a better dividends, and the outlook is pretty strong. They've actually guided quite nice numbers for FY. So all they have to do is hit those numbers, and I think just for the dividend point of view, Dave, you're looking extremely well. So this one for the next 12 months, if they can deliver those numbers that they've promised this month, you're probably going to be looking at a higher share price.
Yeah, and I think out of all of the ones so far we've seen, this one is technically.
Yeah, and the other thing I just wanted to add to this, these guys are in the tech, so they're recruitment services. So they've got in the healthcare space, so nurses, which is a pretty defensive industry. You need to keep hiring those people. Also tech space. So all those, I suppose, pretty frontline type people that you need to keep the economies going.
Excellent, Wolf. And I think this one, out of all the ones I've seen, that technically, I think you can have a nibble at this one right now.
There's one. Yep.
XRF. Look, I've been on Einstein. It's got a great looking chart, Wolf. Looks like again it could go higher next week. So very, very strong, wasn't it?
Yeah, look, what a great little company at the moment, right? Fantastic result, strong outlook. I mean, they said they've already got, sales pre-sold pretty much also most of the equipment they've got. This is good. So I'm expecting a pretty good result in FY23. Cheap, good dividends. Again, I'm liking this. This is another one of those small, never looked at it before. I know we traded it before, but never looked at it in a bit more detail. And if they can deliver on those, that positive outlook that they've talked about in the report, you're probably going to see this higher.
AUB,
Mm-hmm.
Again, Wolf had a tremendous run of late,
Mm-hmm.
back above trend,
Mm-hmm.
and they deserve to be on that announcement. So far away, tell us what you liked about this one.
Look, all around, the result was very strong. And again, probably surprised in the upside. Good positive outlook again for the next 12 months. Insurance broking at the moment is probably one of the good places to be in an inflationary market. So, at the end of the day, this is good. 12 months, I'm expecting this to go higher.
All right. PLS.
All right, this is a surprise, right? I'm going left field here. And the reason is, so I looked through many stories in this space, lithium space. I looked at mineral resources, which has got, Wodgina and Mount Marion. And I've been looking at IGO with its, green bushes, right? Operations. So I'm trying to, the reason why I'm looking at lithium is, I'm sort of expecting lithium to stay pretty strong for the next 12 months, right? So it could be one of those coal type situations. So what I'm looking for is a company that can grow production. So PLS is my pick in this space. So they're going to grow the production by 50% in FY23. If they can get on top of the costs somewhat, right? I mean, I'm expecting some inflation, which is fine. But if they can get, it doesn't go too far out, increase the production by 50%, they're going to hopefully increase their cash flows, bigger profits, and maybe come up with, dividends to boot. Could be another one of those FMGs in play, Dave. You just never know.
Sure. And is this still is PLS still a takeover target or? Yeah. Wasn't I think years ago there was talk about FMG having a look at it. I bet they wish they had now.
Look, it was actually Mineral Resources. They've actually sold all of the shares out of PLS.
Yeah, no, they did. But I think what FMG would there was definitely gossip at the time that Andrew, my friend Andrew.
Yeah, your buddy.
My buddy was looking at this. Okay, SWM.
Mm-hmm.
So just struggling to get through trend, Wolf, but again, inexpensive and good and decent growth.
Yeah, this is probably the cheapest stock what we've got. They delivered very well for me, and the outlook wasn't that bad. It was pretty positive all around. Number one station in Australia. If there is a recession, you might see a little bit of advertising weakness, but you know what? You're probably going to see the people that are subscribing to those Netflixes and probably also cancel those and come back to the free to air, I'd say, right? They're going to save money somewhere. So, there's a trade-off between maybe softer advertising versus more people watching your channels, which actually could even each other out. So I'm look, because it's so cheap and the outlook was decent, I'm happy to give this another 12 months and see it go up to say 60, 70 cents.
Right, and when you say cheap, I mean a full PE is very cheap, isn't it?
Mm-hmm.
I mean the next one on your list is Goodman Group, and again, really at 10 times, it's not expensive. Would you mind if I called it cheap or not?
Well, look, again, it is technically speaking, right? Technically speaking, two ways of looking at this. You've got remember we talked about this, the statutory results versus the underlying results, right? Mm-hmm. Statutory results say they are expensive. Underlying results, they say they are cheap. There's one-offs in there. So look, when I say when expensive, 18 times is expensive. No, it isn't, right? But it's not as cheap as, like, say, you're talking about 10 times, 11 times, right? Which is the other way of looking at it. But I think, look, Dave, it doesn't matter 10 times, 18 times. Overall, the company's delivered extremely well, right?
Yeah.
You've got to give them, a lot of plaudits for the last 5 years. They've been delivering in a difficult market. Grew 20-something% last year. They've guided for 11% to start off with. Remember, these guys love to under-promise, over-deliver. So for me, I've got faith in this management. They're going to deliver that 11% and more.
I mean, actually, if you look at them since 2012, Wolfie, this is on a monthly chart. They haven't broken the trend.
Low, have they?
Yeah, you could understand. I think it is going a little bit lower, but maybe around that for those long-term buys, maybe they could have a look at this around 17.44 around.
I agree.
And basically, buy them off your monthly chart, and like you said, you've got to have a stop loss and everything, but it's a long-term play, and I think Goodman Group is one of those stocks that you can trade off your monthly chart, no problem.
Yes.
Wolf, just before I go, obviously I've got a DGL getting absolutely shellacked, trading 12 times now. So
yes.
what's happening now, Wolf? The algorithms are coming in, the shorters are coming in. Everyone jumps on board, max that price down. This is what the fundies will do. But
they see blood in the water, don't they? Right?
Yeah,
they just
they see blood in the water. So at 12 times, looking cheap. We'll make a decision on this at the end of the week. All right? Which is tomorrow. Yeah, and we'll decide what to do. At the end of the day, I think it's an overreaction completely on a company that actually announced very well, but just failed to give guidance. I mean, really, not giving guidance, getting smacked this bad I think it's a little bit tough, but say la vie.
Yeah, it is this market, isn't it? Like this, it's very punishing if you don't come up with what they want to hear.
Yeah, no, definitely. Wolf, I just would say those two brokers came out today. Were very bullish on Webjet. Obviously, that announcement yesterday was good. The roaring growth that's coming their way.
The limitless opportunities, Dave.
Yeah, different. Some of the brokers had a look at that and they were like, "Oh my gosh, it's roaring!" They got very excited.
Well, limitless opportunities. We're moving our price tag from $5 to $1,000.
Wolf, the other one is Woodside WDL. Again, nice to see the brokers. WDS. WDS. Oh God, Dave. WDS. Good to see the brokers very, very bullish on this, and thinking target price is now around that 37. So I like the chart. Maybe an opportunity there with a little bit of a sell-off this week. Yep. On that note, Wolfie, thank you very much, and thank you so much for obviously delivering those 10 stocks that Wolf believes reported well. Now, what we're going to do, I've got these on my watch list. We know the market is selling off. So what we're going to try and do is get excited about these when we think it's time to get in them. And unfortunately, if you can see the price action so far, I'll just get the XJR, Wolf, because it doesn't matter what we like when if the markets sell off, everything gets tough. But it's really starting to look like it's rolling over, and the price action is not good at all. So it doesn't matter what stories you're in at the moment. Unfortunately, if the market goes down, everything tends to go down, or most things.
Yeah, no, unfortunately, there's no, they don't have any prisoners in there. It's just everything goes. However, not everything goes at the same pace, and there might be some better stocks that hold up pretty well. Yeah,
it's interesting, Wolf. One of the members of the Fed were saying that next year they think the interest rates should be at least over 4% in America.
Yep. Which is, Dave, good. We need some normality.
Yeah.
So in case of any other troubles down the road, there's something to play with.
So tell me how, just before you go, I've got a question is, the interest rates, the whole world's very much interconnected with borrowing money and our banks and US banks. The fact that things are heading high in America is obviously a signal that equally here in Australia, we could see these interest rates head a lot higher than maybe what people are talking about.
Quite possibly, right? Remember that we are a little bit different positioned here in Australia than the US. However, we're going to go up. The inflation does not have, I suppose, respect borders. It will definitely affect us somewhat. It just depends on what level and how well we, as a nation, navigate through that. So we're going to have interest rate rises, no doubt, and we're obviously having through at the moment. Whether we go as high as the US or not, time will tell. I mean, remember, for example, with the fuel, while we are affected in a way, we are also protected in a way. So yeah, look, I'm intrigued to see where we end up, Dave. I'll be happy with we get into the threes, to be honest. I think we need to, and that will give us a little bit more stability and normality.
All right, absolutely brilliant. On that note, Wolf, thank you very much. And tomorrow's the last day before you go off to war.
Thanks. I've got my khakis and everything else ready.
All right, good. You're going to need them. All right, thanks, Wolfie.
Cheers.
Bye-bye.
Bye.